A share generally refers to a unit of ownership in a company, corporation, or mutual fund. When a company decides to raise capital by selling ownership in the form of shares, it divides its ownership into smaller, equal parts. These parts are known as shares or stocks. When you purchase shares of a company, you become a shareholder or stockholder, which means you own a portion of that company. The ownership stake you hold is proportional to the number of shares you own relative to the total number of outstanding shares of the company. Owning shares in a company can provide several benefits, including potential for profit. If the company performs well and its value increases, the price of its shares can rise, allowing shareholders to sell their shares at a higher price and make a profit. Dividends. Some companies distribute a portion of their profits to shareholders in the form of dividends. Dividends are typically paid out regularly, providing shareholders with a source of income. Voting rights. Depending on the type of shares you own, you may have the right to vote on certain company decisions, such as electing board members or approving major business actions. Diversification. Owning shares in different companies can help you diversify your investment portfolio, spreading the risk across various industries and companies. Liquidity. Shares are usually traded on stock exchanges, providing a relatively liquid investment that can be bought and sold relatively quickly. It's important to note that the value of shares can be volatile and can go up or down based on various factors, including the company's financial performance, market conditions, and broader economic trends. Therefore, investing in shares carries both potential rewards and risks. If you're considering investing in shares, it's advisable to do thorough research, consider your risk tolerance, and, if needed, seek advice from financial professionals. Thanks for watching.